Hey everybody, happy Friday. I'm hoping you all had a great week. Guess what? It's going to get over 60 degrees this weekend. We're hoping for some springtime weather, but it'll probably snow again next week. Hey, a few things for you today. Let's first of all talk about FICO changes. There's a lot of rumors out there that the credit reports are going to change. This is kind of accurate, but it's not going to happen until 2025. Right now, we use Experian, Equifax, and TransUnion. There is a proposal on the table that we use either an Advantage score or a FICO 10T score. And maybe we only use two scores. So there's a lot of chatter about this. Nothing is really going to happen until 2025, and there's a lot of time for changing. So I'm not seeing it until I actually see the guidelines. Second of all, I've had two people call me this week and some chatter on Facebook about FHA releasing a 40-year mortgage. This is not accurate. FHA released a forbearance or a modification mortgage. So somebody is in foreclosure or pre-foreclosure or struggling, they can go to FHA, and FHA has the potential to extend their loan out to 40 years. So basically what's going to happen is let's say somebody's behind 5 months or 6 months or 12 months for that matter. FHA will refinance that 30 years and then tack the rest of it on to the 40 years. So nothing is happening on a purchase side or a refinance side. It's just on modifications. One good piece of news is the federal government came out and says that they are not going to enforce the 40% debt to income ratio interest rate hit. In January, they came out with a program that says came out with a rule that says we're going to penalize, for the better lack of words, any file that's over 40% debt to income ratio. This was totally garbage. I don't know how they were going to enforce it because income is so subjective when everybody calculates it. So this is good. They postponed it till August. I hope, wish, pray that they're probably going to get rid of it. One other change that came out this week, Idaho Housing is changing their second down payment assistance program. So Idaho Housing has a spectacular first time, second time, and third time homebuyer program with down payment assistance. Prior to a few weeks ago, Idaho Housing was the down payment assistance second was just a flat 7% interest rate on a 15-year term. Now what Idaho Housing is doing is they're adding 2% to the note rate that and that'll be the rate for the second mortgage. So as an example today, Idaho Housing is 6% on their conventional bond program. If somebody wanted down payment assistance, instead of a 7% interest rate, is now going to be an 8% interest rate. So kind of a little bit more challenging. But on the flip side, rates have actually come down for the fifth straight week. We're actually seeing some very, very nice improvements on rates. Not so much today. Unemployment numbers came out okay, but not enough to influence the rates. But also, it's a short trading day. So rates have come down, and we're seeing the typical spring thing happening. We're seeing multiple counter offers. We're seeing people getting all offers in, waiting for bids to happen. So this is really a great time to buy it because sellers are still giving closing costs, and rates are down, but we're probably not going to see this much longer. It could switch over to a seller's market just like that. So with that, thank you very much. I appreciate your business as always. If you ever have questions on anything, please don't hesitate to give me a call, even if it's not my file. I'm always here to help you guys out. Thank you. Make it a great day.